Hello everyone. Let's begin the Bazaar Ki Baat. The Indian equity indices staged a strong rebound in October. We saw the S&P BSE Sensex 30 index rising 5.9% and the Nifty 50 index rising 5.4% in October. While the larger peers have shown some kind of a rebound, the smaller peers and the smaller companies have lagged behind. We saw BSE small cap index rising at a relatively demo 1.3% in October. This rebound has largely been on the back of strong corporate earnings reports and a less hawkish stance on the part of most central banks. We also saw a rebound in the US markets. There was a comeback. However, Nasdaq continues to remain at one of its lowest points in the history. Kshitij, what do you think about the overall market? Why don't you give us a brief picture of what is your stand on how the market is really behaving?
Right. So if I look at it in a broader picture, August was the month of hope. September was a reality check for investors, and October the aggression has been back. So why Indian markets, as we saw the Indian markets compared to US markets, why there are 4 to 5 things which are working for the Indian markets. First of all, structurally, which this has actually been talked about a lot, is that there is change how retail investors are investing in the Indian markets. From the beginning of the COVID period, retail investors have been structurally entering the market. This has helped to lower the impact of FPI selling. In periods of FPI selling subsides, the markets turn buoyant. And then in a period where FPI's domestics turn buyers, the markets are reasonably strong. So the flow into equity funds and directly into the market should continue to be strong for a longer period of time. That's what we are seeing also. And our clients also, we are seeing the same. So this has been one of the biggest structural story that the retail investors have started investing big time in the Indian market, so which has dented the impact of quick money or fast money, which the FPI or institutional investors bring in. Secondly, the big positive for India is outsourcing. India post-COVID, CEOs around the world are actually becoming comfortable with employees working either from home or from India. In addition to that, the India has that for after years of corporate balance sheet deleveraging, capex cycle in India has started to pick up, largely on account of the we are seeing home sales data has been improving, PLI assisted corporate capex has been happening, and continued government capex are the three major boosters for this. In a recent report from Morgan Stanley, manufacturing share of GDP is supposed to increase from 15.6 currently to 21% in 2030. So, in short, if was already the office of the world, we will also become the factory of the world going forward. So, this is a big positive for India. And there are a few other, I would say, out things which are temporary things which are also benefiting India is that there's a China plus one policy, which is helping India and few of the other Asian countries. Is that the post COVID, China continues to shoot itself in the foot. There has been with its overt aggression and COVID flip flops. We are seeing if we see the chart or the of or your presentation, we can see how bad the Asia index is performing. This is largely due to China. On the though all this is all good, but on the macro front, we cannot be completely unaware of the hawkishness from Fed and a sharp decline in US tech companies. These are, I think, the two biggest concerns which plague the market. There is a sharp divergence currently between India and US. This I don't think this is sustainable. One of the things has to change. Either US market has to reverse its course, or the Indian market has to fall. So something will given. So we'll have to wait and watch for that. Yeah.
Right. So
Thank you.
clearly looks like an India growth story in the long run. But when I look at the sectoral performance, I see that the in the last 1 month, most of the sectors have been in green. Energy and banking sectors were the best performing ones, while FMCG and consumer durables were the two sectors which kind of lagged behind. We also saw that PSU companies have performed well during the month. We see that the BSE PSU index was one of the toppers on the leaderboard with 8.4% gain. IT also had a positive month. It fell through the year, but it was a good month for IT. So, what's your view on the sectoral side of things?
See, overall, I think largely this month the picture is due to the Q2 results. They are in full swing, and we are seeing some big concerns over costs. But let me first take each sector one by one, which you talked about. Financials, which you said has had a good month. Actually, the largely the story there is that the banks are witnessing a strong credit growth. I think close to 16-17%, which after COVID we are seeing for the first time. And NPAs, as I talked about corporate day leveraging, here also NPAs are sustaining at a low level. So financials is a space which is going to do well for I is in my view for some time now. On the other hand, autos they continue to perform well. We are seeing good auto sales numbers all around. Basically, I think the October month was the month for where rate sensitive sectors like banks, PSU or and private NBFCs, auto stocks, they triggered a rally. So that was the I think the main reason for the rally in October. On the edge, and also I think you talked about IT, right? So there, I think that contrary to common expectations, most IT companies, the growth is sustaining. And so IT has been one of the biggest sector for India. And INR depreciation, which has happened during the last few months, will also help the space. So we cannot count IT out. So though it has performed relatively badly through the year, we there are companies where you can see value now. So and then yeah, so and now I was talking about Q2 results across the board. Companies have seen robust growth in top line, and but higher input costs have damaged the bottom line growth. This is extremely steep in case of industrial sectors like cement, metals, infrastructure. Cements you can see across. I think there has been a sharp decline in numbers. However, the positive takeaway has been the strong top line growth, and obviously the export companies will benefit from INR depreciation. On
Right.
the, I think additionally, if we talk about laggards, as you said, FMCG and consumer durables was impacted on both uh, uh, top line and bottom line. So higher input costs, as we said, are impacting the bottom line of the companies. But for FMCG and consumer durables, the slowness in rural demand has also impacted their top line. So they have got a double whammy. That's the reason they are underperforming. And having said that, I think overall consumer companies in India are going to do well. We recently crossed the $2,000 per capita GDP mark, which was an important mark for a developing country. And we will continue to see this accelerate further. And as more and more consumers upgrade their lifestyle, consumer companies are going to do well. So yeah,
Right.
that's my
So we do need to watch out for corporate earnings, even at a sectoral level, to see where exactly the impact is maximum seen. Uh, Kshitij, most of our clients over the last few months, it was technically the first time they saw a correction in their portfolios happening since March 2022.
Mhm.
And we have seen, some kind of a recovery in the markets from July onwards. So in a very in a short time frame, people have seen the have read news about markets bleeding, and now about how markets have risen back up, and there are talks about whether it's going to breach the highest number ever. And a lot of our clients are now reaching out to us and saying things like, abhi markets upar hai, abhi nikal lete hai. उसके बाद जब वापस
Mhm.
गिरेगा, and there is a perception that markets गिरेंगे, so जब गिरेंगे तब डालेंगे, and our response almost always is no, never, you don't do that. Why do you think is, why do you think we are responding in that way?
See, I think the simplest answer is because nobody knows what is going to happen. So most of the time, it's the easiest answer that we don't know,
Yeah, I mean,
right?
that
When
is
it's
true.
going to turn. Yeah.
Yeah, right. That's true. But I mean, what will happen if people actually execute that strategy? कि अभी निकाल लेते हैं, गिरेगा तब डालेंगे. What is going to happen if people start implementing that strategy?
So I think we prepared a data. Maybe you can show the chart.
Yeah.
Largely, I think if you miss the top 10 days, if you invested in Nifty 50 from 2000 onwards and you just miss the top 10 days, right? Your portfolio value reduces by half, right? And just imagine, and most of the time, what has happened is that the best days, these top 10 days, have occurred in very close to the worst days, right? So it's not like you can really time the market. You just imagine you exit the market and bam, it turns, right? You actually lost a lot of money, and then when you exited and waited, it is given already all the gains have happened. So that's painful for everyone. I think anybody of so I can imagine I can imagine how as an investor you feel, but it's just that you need to be a little unemotional about it and let the markets play out. Most of the time, it's always good to be calm and stay invested for the long term.
Indeed, I mean it is painful. I mean, when you see the impact on your portfolio, and I think this is something that has happened in 2020, when the markets
Hmm.
recovered after, April, May, and there were so many people who started redeeming their funds in July, thinking that
Right,
COVID is so widespread. It's once in a lifetime kind of an experience, and markets are definitely going to react. And a lot of people who exited in 2020 continue to wait for almost more than a year to come back to the market. And I think that is when markets actually delivered most of the returns in the last 2 years. So I clearly see your point. And yes, so the point that we want to deliver here for our listeners is that timing the market is very, very difficult. Um, it's very difficult to also predict what's going to happen in the market in the short term. It's very important to have a very clear asset allocation strategy to be
right.
able to take the benefit of market rallies and market downturns as well. Thank you so much. We will see you next month.